And there has also been some selling which we've seen over the last last month or so. Very famously, Motilal Oswal came out and sold their stake in the mutual fund business, of course, of theirs in Kaynes Tech, and since then it has been on a downtrend. But overall, what Kotak is highlighting is, of course, based on 2025 annual report, and as you rightly said, a lot of those issues have been starting to work on from Q1 of FY26. But they have mentioned that significant revenue as well as profit contribution from the smart metering business is a positive, but there's been ambiguous accounting treatment for goodwill of the acquisitions that they've done in the last couple of years, where they've also mentioned a very sharp increase in the intangibles for the technical know-how of these said acquisitions. So that's a concern that they've flagged. They've also flagged that there's been a 22-day increase in the net working capital business, something we spoke to them post Q2 earnings, and they have mentioned that there are a lot of actions that are underway to reduce the net working capital below 100 days. The free cash flow is the other one where they will continue to focus on that, but capex, as they've already announced, for the OSAT business as well as for the PCB business will be high over the next couple of years. So you will start to see a slight pinch on that aspect, but management has reaffirmed post the last 2 quarterly earnings that a lot of these issues are transitionary, and as and when from January of 2026, when the new ventures start to come in, a lot of the capex will be taken care of by those said entities. So while this report, it does highlight about the challenges faced in 2025 on the basis of net working capital amongst others, these are transitionary issues which have happened in the past, and it's important to look at the management commentary that they mentioned post quarterly earnings, as you rightly said.
Okay, thank you.